Greetings to those who are connected with my channel, and greetings to those who are using info.excise.com for years and years for their business needs. This is Nashimar, the CEO of info.excise.com. I request attorneys, tax preparers, taxpayer entrepreneurs, student economists, and the most important politicians who create laws to subscribe to my channel to receive the most up-to-date and accurate tax information to enhance their knowledge. My today's topic is about private foundation activities are protected from terminated through special restrictions. I'm going to cover in this program what are the restrictions and requirements and what are the excise taxes which may be imposed by the Internal Revenue Service if the defined restrictions and requirements by the Internal Revenue Service are not followed. If private foundation fails to comply with laws and regulation, it may lose its status. I'm going to address in this program the special restriction imposed by the Internal Revenue Service on private foundation activities. Let's start with net investment. The net investment income of most domestic private foundations is subject to an excise tax. Private foundations are subject to restrictions and requirements, which I'm going to explain here a few of them. Number one, restrictions on self-dealing between private foundations and their disqualified person, such as substantial contributors, foundation managers, and certain other related persons. Number two, foundations are required to distribute their income annually for charitable purposes. Number three, there are restrictions on foundations holding in private businesses. Number four, there are restrictions on investment that could jeopardize the execution of exempt purposes. Number five, provisions to ensure that expenditures are exempt from further exempt purposes. Now I'm going to share two tiers excise tax process which is defined by the Internal Revenue Service, that if the foundation and its related parties are not following the defined laws and regulations which are defined by the Internal Revenue Service, this two-tier excise tax can be imposed. If these provisions are violated, which I have just shared about, five provisions, if these provisions are violated, the private foundation or its disqualified may be subject to excise taxes and penalties. Two-tier excise taxes are imposed on private foundation, foundation manager, and other disqualified person who engage in certain prohibited acts by the code. Let's talk about first what is the first tier excise tax. If private foundation commit prohibited acts that include self-dealing, jeopardizing investment, failing to distribute income, and making taxable expenditure, they will be subject to first tier excise tax. Let's just discuss one case study to explain. The ABC family foundation lends money to Don Joe, who is a board member and a substantial contributor to the foundation. The foundation's financial transaction with a disqualified person, Don, is a financial transaction that would be considered self-dealing. So what would be the consequences for excise taxes in this case? A first-year excise tax must be paid by the ABC Family Foundation for the amount involved in self-dealings. Let's assume that the loan amount is $100,000. Self-dealing is subject to a 10% excise tax rate in the first year. Thus, the foundation will require to pay $10,000 in excise taxes. What is a tier 2 excise tax? Private foundations face a more severe penalty from the second tier excise tax when they commit prohibited acts like self-dealing, jeopardizing investment, not distributing income, and making taxable expenditure. In the event that the prohibited act is not corrected within a specific period, an extra tax of $200 of the amount involved will be imposed. Thank you and God bless you.